Warren Buffett is selling stocks. His cash reserves are at record levels. Does this mean a market crash is approaching? What does the investment legend know that ordinary investors are overlooking? Buffett's stance on market valuations reflects considerable caution, particularly in the context of extremely high valuations. The continuous sequential stock sales by Berkshire Hathaway over 9 consecutive quarters can be interpreted as a clear indication of his conviction that the current market is in overvalued territory. This selling activity is not a random occurrence but rather a systematic application of Buffett's principle of purchasing assets only when they are significantly below their intrinsic value. At the same time, Berkshire is accumulating historically high cash reserves. The latest quarterly report shows that Berkshire Hathaway continued to reduce its shareholdings and its cash reserves reached a record $325.2 billion, up 17.4% from $276.9 billion at the end of the second quarter of 2024. This enormous liquidity position suggests an effort to maintain flexibility for potential future market corrections or attractive investment opportunities that could arise from financial market turbulence. Another warning sign is the state of the so-called Buffett indicator, which expresses the ratio between total market capitalization and gross domestic product. At the beginning of 2025, this indicator soared to an unprecedented 207.04%. Far above the historical average of 85%. Historical data suggests that similarly extreme levels of this indicator have typically preceded significant market corrections, reinforcing the assumption that Buffett perceives the market as unsustainably overheated. From an investment opportunity perspective, Buffett faces a challenging situation in which he struggles to find assets that meet his investment criteria. In Berkshire Hathaway's 2024 annual report, he stated that due to the conglomerate's enormous size, it is becoming increasingly difficult to identify businesses whose acquisition would have a significant impact on the company's overall performance. This suggests that current market conditions are unfavorable for finding undervalued large-cap companies that align with his investment approach. Nevertheless, Buffett is selectively increasing positions in certain sectors. One of the few significant moves in his portfolio has been increasing his stake in Occidental Petroleum, implying his confidence in the energy sector. This move suggests that despite his overall caution, he continues to monitor specific market segments that he considers promising. His historical approach and current actions indicate a strong focus on long-term value and an awareness of market risks. Buffett has long been an advocate of an investment horizon spanning decades, and his predictions are based on fundamental analysis. In the past, for example, when forecasting stock returns from 1999 to 2016, he demonstrated an ability to identify long-term market trends. His current caution is therefore likely a reflection of strategic patience rather than concerns about short-term market fluctuations. Another factor likely influencing his market outlook is the increasing prevalence of speculative behavior. Buffett has previously warned that the stock market at certain times exhibits signs of speculative euphoria resembling a casino environment. This sentiment is likely to persist in 2025, especially given inflated valuations and waves of speculation in areas such as artificial intelligence and technology stocks. The combination of these factors, high cash reserves, long-term accurate market predictions, and continued stock sales, suggests that Buffett may be anticipating a market correction and wants to preserve capital to deploy later under more favorable conditions. Overall, Buffett's approach to the stock market in 2025 can be described as defensive and prudent. His actions indicate that he views the market as extremely overvalued and investment opportunities as limited. The Buffett indicator at record levels, Berkshire Hathaway's long-term selling activity, and massive cash reserves all point to preparations for a possible market correction. However, Buffett's strategy is never black and white. While he avoids broad market exposure, he continues to carefully select sectors where he sees fundamental value, such as the energy sector. His investment philosophy remains steadfast: patience, value focus, and disciplined capital allocation. Buffett is preparing for a storm, but what about you? Share your thoughts in the comments, give a like, and don't forget to subscribe for more investment analyses.